Hi there, my name is Miguel Gonzalez. I'm a mortgage broker with My Loan Choices, and welcome to the First Home Buyers Academy. Hello again, and welcome to the First Home Buyers Academy. My name is Miguel Gonzalez, and today we got a very exciting topic. We're just gonna go and start looking at your savings options for the deposit. Before we go into in detail into the topic of today, I just want to recap on the last video. So we had a very important topic that we discussed in the last video, which was basically what the lenders will assess in your loan application. I introduced you to a couple I recently helped to buy the first home, John and Jane, and we explore the case scenario on how we calculated her borrowing capacity. We look at different banks as well. We understood as well that every single bank is different. They calculate your borrowing capacity in a different way. That's basically the reason why one bank was showing like a very low borrowing capacity, and then there was another bank showing like it was almost like $200,000 difference between one bank to the other. So yeah, very, very interesting. And now we're going to continue today. So in the video today, we're just going to continue going deeper into what the lenders will assess into your loan application. And basically, once they check your income, once they check your expenses, and they come across and say, yeah, you have a really good borrowing capacity, the next step is basically check how much do you have in order to contribute into the purchase. This is very important, and we have like different perspective in this area. I believe you probably have heard of the traditional deposit, to have a 20% deposit. Maybe your family, your parents, or maybe you have heard from the real estate agent, they recommend you to have a 20% deposit. Sometimes the banks as well, they might tell to you, they might say to you, you need to have a 20% deposit before you can actually apply for the loan. Well, that's traditional, and there is some benefits of having a 20% deposit, but you still have some other options as well, and you still can come with a small deposit, and that is basically coming with a minimum of a 5% genuine savings. So depending on the banks, depending as well, so if you because you are a first home buyer, you might get some access to some government benefits as the first homeowners grant, or maybe the first home loans deposit scheme. And I will explain all of that in another video going forward. But look, what you actually need as a minimum, if you're a first home buyer, you need a minimum of 5% genuine savings. And what I mean by that is money that you have into your savings account, or maybe a term deposit, money that you have held for maybe for more than 3 months. So 3 months, or you can show that you have saved genuinely over the last 3 months. So the banks will ask you for bank statements for the last 3 months to confirm that you have genuine savings. On top of that, you need to cover some extra costs as well. So, and I will explain that later when I do the funds position in the next video. But basically, you need to cover some extra cost. So 5% will be the minimum, plus any other cost involved in terms of the purchase price. There is some exemptions to the rule. You might receive a gift, bonus, or something like that. And we can actually discuss where the money is coming from. So there is a lot of different options, and I'm more than happy to discuss with you in your particular circumstances. So what's going to happen if you don't have the 20% deposit? Well, basically the difference between having a 20% deposit or coming with a smaller deposit is that you will have to pay lender's mortgage insurance. And what exactly is lender's mortgage insurance, and what does it do for you? Well, in very short, lender's mortgage insurance is a cost to you. It doesn't do anything to you. It doesn't protect you at all. So in other words, what the bank said to you, they come to you and they give you an option. basically. And they said to you, Mr. Customer, look, I'm very happy with your income and your expenses. Your borrowing capacity is very good. We are happy to lend you up to 80%. And if you have the rest of the money, then no questions asked. You can get preferential interest rates. It's a strong deal and we know it. So no problems. You get approval at 80%. But the banks also give you the option. They also come to you and say, look, Mr. Customer, we're happy with your income, with your expenses, your borrowing capacity is strong. However, we understand sometimes people cannot save the 20% deposit. So what we're going to give you is the option to lend you up to 95%. So 95% of the value of the property, as long as you can come across with the 5% genuine savings and you can cover some extra costs as well. The only catch for you is that because it's riskier for us, for the bank, we're going to take an insurance, protect ourselves in case you cannot pay for the mortgage. Okay, so you are going to pay for that premium, and then we are happy to lend you the money as long as you have 5% genuine savings. You pay the premium for the mortgage insurance, you pay any other cost involved in the transaction. And yeah, so it's very important you guys understand that lender's mortgage insurance is protection for the bank, is not protection for you as a customer. If there is a chance for you to avoid paying this mortgage insurance, this lender's mortgage insurance, I will suggest do whatever is possible in your means to try to avoid it. Try to avoid it, or at least minimize the cost of lender's mortgage insurance. And I'm going to explain a couple of things for you to actually how you can avoid paying mortgage insurance, lender's mortgage insurance. If you're a first home buyer, you can probably have heard of the first home loan deposit scheme. So in the next few videos, I'm going to introduce you to all the government benefits and I'm going to explain in detail. But basically, this is just to illustrate what first home loan deposit scheme will do. If you are not eligible for the first home loan deposit scheme, maybe you have a family member, maybe you have your parents most of the time. They have property and they're happy to help you out in order to buy your first home. What the banks is giving you is the option to use something that it's called family guarantee, family pledge, or equity guarantees. So different banks have different names for it, but basically it's the same thing. So on the left side here, you can see this is the property that you want to buy, and the bank is telling you, yep, I'm happy to lend you up to 80% on that property. Okay, and you can go to your parents most of the time and ask them if they have equity in the property, and if they are happy to help you out in the purchase of your first home. They can put a property as a guarantee, as a security for the purchase. So the bank takes security of 80% of your property and 20% of your parents' property. You get 100% loan. You need to make sure that you can actually borrow 100% of the money. Okay, so you need to demonstrate your borrowing capacity is up to that level. If you have the availability to borrow up to 100% and you have a guarantor, then definitely we can use this. And in that position, then you won't have to pay lender's mortgage insurance. All right, so as we come to an end on this video, now we are basically prepared to go to the next video. So same as before, what I'm going to do is I'm going to take you again to John and Jane's case scenario. So, and put it all together so that everything makes sense. In the next video, I'm going to take you through a funds position. Basically, what we did for John and Jane's when they bought their first apartment. So, funds position is basically a summary of all the costs involved in buying a property. How much do you need to budget for every single cost that's going to be involved in the purchase? And basically where the money is coming from, how much deposit you're providing, how much is the bank is going to lend you, and then we go from there. So keep an eye for the next video. It's coming soon. As always, if you have any questions, just give me a call. My number is 0430 020 620, or send me an email with all your questions. And yeah, I definitely will be more than happy to help you out in the process to buying your first home. So I'll see you in our next video, and bye for now.